Tech Tuesday. Happy October. As many of you are aware, we do a special edition on emerging technologies and trends. Today's the day. Today we explore the future of finance, its risks, its opportunities for the Canadian innovation economy. For those of you who don't know me, my name is Veronica Farmer. In addition to leading the marketing efforts for Wesley-Cobra International, you're stuck with me every Tech Tuesday. But this time, I got a reprieve. I have someone else doing the panel. So Tech Tuesdays are made possible by Terry Matthews and the Wesley-Cobra Foundation, whose support really is about committing to the well-being and the growth of our local business and tech community. This is why we have this lovely gathering every month. You will see a video team. There's also some people recording this. Tech Tuesday works in partnership with the Ottawa Business Journal to capture the highlights of this event with the different insights from different speakers and the topics that we host. OBJ and Techopia serves a key resource for understanding the tracking of the Ottawa tech landscape and ensuring that we have this video recap. So you can find that in about a week or two on the OBJ's YouTube channel, Spotify, and through their website. Is there anybody here from FIDUS? Come on, FIDUS. Gonna do a shout out and you're not here. Okay, let's pretend someone from FIDUS is here. So FIDUS is the presenting sponsor for the Techopia Live Tech Tuesday partnership. And listen, they're a pretty key part of this tech ecosystem here in Canada. They provide electronic system design services, and we appreciate that they supported the Techopia sponsorship. I've got a piece of fluff here. Listen, you noted my tech loud cup, which is wonderfully annoying in my opinion. Listen, it's been amazing. It's been a great way to get everybody in. It's a local invention, and you will have received when you registered a ticket. And this will help you be one of two winners that potentially will win it right after the panel. So we'll do the draw after the panel. So if you haven't picked it up, now is your time to run out and get your ticket. I have a couple of things I need to bring to your attention. First, SaaS North is coming. So everything that is amazing about software as a service, there's great speakers, great networking. It's a really good event to go to. You'll see on the tables as well as up here, there is a special Tech Tuesday discount code, LSpark20, which gives you 20% off the ticket price. And we thank the LSpark gang, and I think there's a couple LSpark gang here. John, I see you. I see you here. They are our local corporate accelerator who is helping startups and SMEs work with large corporate enterprises to scale and grow. And Glenn is here as well. So if you didn't capture it, you can capture it on the table. There's also something really super cool happening this Thursday, right here in the Tech Park. Canada North Business Association, they are the advocate for the companies in this park. They're based at Hub 350, they're at 350 Leggett, you can remember it that way. They are leading, alongside a group of wonderful partners, a very cool project of which you can actually participate. The Canada North Smart Shuttle is an autonomous shuttle that's going to do a loop around the park, stopping at 8 pickup spots. And I've got a bit of a video, if I get this right, that you get to watch.
One of the things that I'm really excited about in this project is I have the privilege of representing Canada North and Canada's largest tech park. And you know, transportation is a critical thing that we focus on.
Incredibly excited about this project with Canada North Business Association, our partners at Arrigo. Here at AreaX.O, we are all about getting technologies that are next gen to market faster, safely, and that's exactly what this project is going to do. We're looking at medium speed shuttle testing to ensure that it is rigorous, it is safe, that it performs in all 4 seasons. We're going to be contributing that specific technology expertise and opportunity here at our private complex in support of bridging that gap between low-speed pilot and high-speed commercial deployment.
Here in Ottawa, we've been working on smart mobility for a number of years. We started first with the AutoPods back in 2019 on a closed private course. Then we've worked with some other vehicles on public roads, but this is the first time we're working with medium speed commercial vehicle, and we'll be testing it in our winter climate. So making sure that it's working in snow, rain, ice, blowing leaves. with all kinds of different things that it'll counter on our public roads and along our route. We're really lucky we have a new LRT station, but it's not actually going to be in the park. So we have a true challenge that we're trying to solve around transportation and last mile. And I'm certainly very hopeful that technology like this will enable that for the Kanata North Research Park.
So in order to safely operate the shuttle every day, we need to complete our operating tasks to make sure that it's ready for operation safely. So we have created we've digitally transformed that process so that staff understand exactly what they need to be inspecting and that management has real-time view of exactly what's going on. So that if there's any deficiencies, we're aware of them and can take immediate corrective action.
DeFi is one of the kingdom partners in this project that we can translate a stop announcement into American Sign Language to make sure that the stop announcement and other transit information are accessible to the passenger.
This project is really exciting for us at Arrigo because it's the first time we're bringing our autonomous drive system to an OEM crash-tested vehicle in North America. Ultimately, our goal at Arrigo is to deliver a solution that not only increases mobility, but does so in a smarter, safer, and more sustainable way.
All can get on that shuttle. I think in about a week and a bit, it should be live. I have Tracy Godin over in the corner there. Stand up there, Tracy. Anybody has questions, but there will be stops. You will be aware, and anybody, you don't have to just be in the park. You don't have to be at a company in the park. You can all get on that shuttle and go for a ride. So yeah, we're really looking forward to it. We do pilot cool stuff in this tech park, which is Canada's largest tech park. One last thing, a reminder. Oh, apparently I have gone too far here, where we've lost a slide. Oh, well, okay. There should be a slide up here that talks about Tech Rocks. So October 22nd, right here in the Brook Street, there's a big Battle of the Bands. Tickets are still available and free. I do apologize. But if you look at our socials or if you look at Tech Rocks, you will be able to find out. But there's still tickets. It's going to be amazing. Happens here on October 2nd. I just wonder if I've messed it up. Wednesday, October 22nd. And Ted is somewhere in this room. There he is. He can tell you exactly where to go to register for Tech Rock. Anyway. capomusic.com. .ca. I apologize, Ted. I don't know. I'm just going to blame someone else. Yeah, fantastic. Anyway, it should be a lot of fun. 3 bands, big battle of the bands. And then the last thing, stick around. As I mentioned, we're going to do a draw for the Loud Cup. So now, to move into the matter of hand, the main event here. I am pleased to introduce your presenter and your moderator. Remember, I get a bit of here. I'm pleased to introduce my colleague, friend, Josh Seerattan. Josh is a senior investment analyst at Western Clover International and an ecosystem builder for Web3, an emerging technology space, sharing insights through his podcast and digital platforms on the trends shaping the future of tech. Josh is really kind of my go-to person on all things bleeding edge, which he reminds me are really not bleeding edge. You're all living it. He delivers it always, though, with a smile, informed and opinionated perspective. Josh is going to present some interesting information to help us sort of set the stage for this wonderful panel of experts that we're going to have on the future of finance. So Josh, without further ado, would you like to take over?
Any opportunity to give a lecture. So welcome back. For those of you who come fairly often, this would be the 3rd edition of our emerging tech session. So 3 years ago, we started with NFTs. And then last year we did decentralized infrastructure. And then this year we decided to go with finance and more specifically digital assets and stablecoins. So I thought, what's more dramatic than the Crossroads, the Model T? We're at an inflection point in how money moves from cash to cards, digital banking, and now programmable finance. It's a digital transformation of capital. It's about the rails of business we use to transact globally. 2025, in my opinion, is the official year of it beginning its mainstreaming. This shouldn't matter to any Canadian business doing any kind of global business. But first, let's level set with some terms, market stats, and some opportunities before we jump into that. So before we get into the digital assets and stablecoins, it's worthy to mention briefly about open banking and open finance, as it's often mentioned as sort of the counter to anything that's blockchain related. The open finance and open banking represents digital transformation paths for traditional banking, TradFi. And it's been positioned as the bank's system's answer to modern finance for the digital economy. So when you're thinking of open banking, think about financial apps as a USB port. Instead of your data being locked in the bank, it's APIs that let you securely plug into other services, like budgeting, apps. You might have remembered a company called Mint, which was popular for a brief moment. That would be an example of it. Open finance takes it a step further. It adds more ports, connecting you with insurance, investments, even utilities. And it's about your data working for you across the entire financial ecosystem. If we look at how finance has evolved and more complicated than I can cover in one slide, but it's essentially from banking ledgers, digital money, your online banking that you're using, and then open banking and open finance, which uses open data and APIs. And then from there, some countries are pushing towards a central bank digital currency with open data systems. While blockchain finance I view as an emerging independent global alternative to capital flows. It can work with TradFi, but it doesn't have to. Which leads us to stablecoins, a product that connects these two paths. Now, bringing it back to Canada, you might be surprised, but we're lagging in this area. Our open banking framework implementation isn't expected until 2026, which would make us last in G7 to roll it out. Legislative amendments to the Canadian Payments Act was announced last week, opening Payments Canada membership to new players. This is a positive step, but it's still incremental and it's not 2020 anymore. There's countries like Brazil and Singapore which are already moved to full open finance, and they're experimenting with blockchain-based settlements. The takeaway is simple. Canada's innovation in this area is policy-led, while other markets it's market-led. This is creating a real competitive disadvantage for Canadian businesses. And that brings us to the bridge. Payments are effectively becoming the transition layer between TradFi and DeFi. And stablecoins are the real-world use case that connects the two worlds. So, now we can move into digital assets. Really, how I would look at it is a digital asset is any form of value, rights, or ownership that exists in digital form, can be transferred, stored, or traded using digital networks. You can think of it like email digitized letters, blockchain digitizes assets, investments, contracts, and participation rights. And there are four main categories here to look at a high level, which is money, which would be any type of cryptocurrency, stability, which would be stable coins that are pegged to a real currency. And then you have the asset category, where it can be tied to like real estate or bonds represented on a blockchain network. And then there's participation, which gives you a right for access or voting or membership. And together, these represent a spectrum of ownership on how to pay, how we invest, how we participate. And then for those who are in the industry, I kind of broke it down how a lot of different people are looking at it. And mainly, I put that on the slide, not to confuse everybody here, but I thought there might be at least one Bitcoiner in here. And they would be, there we go. And you would be very upset if I did give you your own category, which is digital commodities. So it's for the one guy over there. So we can talk about stablecoins in a moment, but just remember this broadly. This is the digital asset landscape. And these are the bridge products actually connecting traditional finance with decentralized finance. So if you think about stablecoins, it's really just digital dollars. There's 4 different kinds there can be, but essentially it's currency built on a blockchain. And it's pegged to something like a US dollar. So it can be, the ones that are being talked about the most right now is USDC and USDT. And they are required to do a 1-to-1 ratio peg, at least in operating in the US. And then you have ones that could be backed to a cryptocurrency like Ethereum, Solana, or something like that. There's gold. And then the last one, as far as I know, it doesn't work anymore. And there's no examples of it working that I have found. But I put it on there just in case it comes up and you want to know what it is. So the goal is simple, to bring the speed and programming of crypto without the volatility of crypto. Stablecoins are no longer a concept. They're fast becoming a key part of the global financial infrastructure. As I mentioned previously, they're playing a bridging function with fintech payments between traditional finance and blockchain, the foundation for programmable borderless payments. So I'm an analyst, in case you didn't know. So I like to have numbers, I like to have stats, and they need to be as big as possible. Sorry, the font, I couldn't get it big enough on there. But stablecoins are creating real business value today across payments, payroll, commerce, treasury management. And we've seen over $7 trillion settled on chain this year. That's more than Visa's annual volume. Cross-border remittance alone are heading towards 60 trillion by the end of this decade. And stablecoins are already cutting costs and settlement times from days to seconds. The blockchain infrastructure is finally robust enough to displace some of the TradFi options out there. Banks, fintechs, and even corporates are now using stablecoins for instant liquidity, global payroll, and on-chain finance. More than 30% of stablecoin supply is already held by institutions and no longer represents crypto-native retail activity only. So when we talk about Canada's position, keep in mind, while the rest of the world is deploying this technology, we are still lagging, and the gap represents both a competitive risk and a policy opportunity. Stablecoins are no longer about crypto, they're about how money actually moves in a digital economy. The business case for stablecoins is simple, it's faster, it's cheaper, and it's programmable. Traditional finance still moves like it's 1995, taking days to settle and wasting over $120 billion in fees every year. Stablecoin settlement is instantly run 24/7 and frees up liquidity. No intermediaries, no banking hours, no multi-day waits, cross-border payments. That's why Fortune 500 adoption is up nearly 50% this year. These are financial rails now being built by the world's largest banks, payment processors, and tech companies. The question is not if the technology works, it's already been decided. It's who is leveraging it the fastest right now. And across the US, Europe, and Latin America, adoption is accelerating. Canada, meanwhile, I'll leave it with this. I think we are at a competitive disadvantage for business that operates globally. I've already come across several businesses this year that do not accept fiat or SWIFT in payments. These are not small companies. These are investment firms. These are outsourced labor organizations. They're not willing, they don't have to take fiat, so they don't. And if your international partner moves on chain and you're not, your form of payment may not be accepted. It's something to consider. Think about how technology has flattened the world over the past few decades. We have the internet made it possible to communicate with anyone. It connected your ideas and business value proposition. You have e-commerce and the Shopifys that made it possible to sell to anyone. It connected our markets. And now stablecoins makes it possible to transact with anyone instantly, securely, and globally. It connects our money. Together, these three waves, communication, commerce, and now capital, represent further flattening of global business. And this time, the advantage doesn't go to just large resourced organizations. It goes to whoever wants to adopt it the fastest. And essentially, if you're a small business, you can bypass having to scale domestically to go globally faster. It's one of the pathways or one of the levers that you can work on, because international banking is a barrier to global business, especially if you're a small business. And I can say I know from personal experience on that end. So as the world builds these rails, the question for Canadian business isn't whether it's a thing, it's what we're going to do about this shift. I mean, you don't have to do anything. We'll be pulled along anyways. The race for global settlement rails is underway. These are all the players here. You can see that it's not just crypto companies anymore. Big tech has jumped into it. Stripe has, I think, onboarded or is in the process of onboarding 30 countries right now, whereas you're not going to really have to do much. It's just going to be in their dashboard to accept as payments. And they've made two significant acquisitions this year to basically say, like, we want to be the payment rail for business globally. And then you have, of course, more than just BlackRock and JP Morgan, but I can't fit them all on there. But you got all the major banks doing some sort of investment or play or support. You have the Visa and MasterCard doing it. You have SWIFT that just announced that they're going to build a blockchain, but 2 years too late, probably. Nobody cares about that brand if you already have a blockchain network that works. There's been over $7 trillion that's been settled on stablecoin rails in 2024. And, just for perspective, Tether, which is the market dominant for stablecoins, has roughly 60% of the market. And they're the 18th largest holder of US treasuries, ahead of countries like South Korea, UAE, and Germany. So this is not a small thing. And the takeaway here is simple. This is a global race for financial rails. It's already being run and adopted by the world's largest companies, not just startups or fringe crypto degens anymore. So regulation is now shaping the playing field for stablecoins. We're watching two different strategies emerge. This is what changed this year. It's really the Genius Act of the US. That is really what has pushed all this forward. So that's what you have with the US. The EU is taking a different approach, more of a control, gatekeeping, I'd say narrow type of process. Whereas the US is more of open up the floodgates. I mean, you got Walmart and Amazon that also want to do stablecoins now. In the US, it requires a one-to-one reserve and licensing, but leaving room for market-led growth. In the EU, it focuses on control and harmonization with caps and non-euro tokens and heavy compliance requirements. I mean, the UK right now is essentially trying to block any stablecoin that's not UK-based right now. And then there's Canada. Well, what can I say about Canada? Effectively classifying stablecoins as a security. So basically tax fundraising, I suppose. For now, the US and the EU are actively shaping global digital asset rails. Canada risks transactional disadvantage. Canadian firms will settle on foreign rails eventually, or they'll do what most Canadian businesses do when regulation doesn't work. They offshore to participate, to decrease market technical costs. The question is no longer about technology, it's about policy alignment and competitive readiness. And worst case scenario, if Canada doesn't move, we'll be using other nations' infrastructure to run our own digital economy just to participate. So with this, we are standing at the crossroads, as I mentioned, and we can either go with the black Model T or the future. One leads to status quo and the other opens up global opportunities. Capital will always flow where the rails are fastest. Innovation will always scale where regulation enables it. And right now, those rails are being built, whether we participate or not. Canada risks being left behind, not because we lack talent or ideas, but because our rules haven't kept pace with global infrastructure. If we want to capture our share of this 60 trillion digital asset opportunity, we need to unlock innovation, enable capital to flow into Canada's ecosystem. Our choice is simple: participate or spectate. At the end of the day, policymakers set the rules, but it's up to business communities to show what's possible. So I'll leave you with this. Canada has the talent, the capital, and the opportunity, but we need to move faster. And if you want to hear more stuff about anything that I'm following, you can find it on my LinkedIn with the newsletter. I post all these stats that you saw periodically of whatever it is I'm following. As well, I often do podcasts with anybody who's building something interesting. And then if anybody is a business owner here or a CFO or an accountant and would be interested to learn on how to execute on a digital treasury or how to use stablecoins for your business globally, fill out the form. And if there's enough of you interested, I'll organize some knowledgeable people like our panel today to come and talk to you about how you would go through that step. So with that, we can kind of jump into the panel. First up, we have Alex Bronis, the Principal of Useful Digressions, a public policy and communication consultant that helps industry associations, think tanks, and financial service organizations. Alex was the Executive Director of FinTechs Canada, building it from the ground up and establishing it as a trusted national voice. Before that, he had senior policy roles at Payments Canada and the Canadian Chamber of Commerce. His analysis is that the intersection of finance, technology, and regulation has been cited by politicians, policymakers, industry leaders, and national media, shaping the national debate on the future of finance in Canada. Come on up, Alex. And then next on the panel we have is Marie-Chantal Leduc. She is the president of Tetra Trust Company, Canada's first regulated trust company for digital asset custody. She brings over a decade of experience in the intersection of finance, technology, and regulation, previously serving as executive director at Block Zero Advisors, senior manager at KPMG Canada, where she helped establish the firm's blockchain practice. Marie-Chantal has worked with leading financial institutes on topics from digital asset custody, tokenization to CBD, central bank digital currencies, and stablecoins, and currently serves as the AMF's advisory committee on technological innovation. And I would just also add that their group has raised $10 million to pursue this line of tech and growing it in Canada. And so the way the market is right now, raising $10 million, everyone should give a round of applause to them for that. So let's just jump right into it. Do we need a Genius Act or an equivalent legislation in Canada? Let's start with you, Alex.
I'd say yes with an asterisk. I think there's a tendency in many conversations about the future of our laws and regulations for innovators to say, I'm a snowflake, or what I'm building is a snowflake, nothing is fit for purpose, you need to create something brand new. If we created something brand new every single time someone said that, we'd have such an oppressively complex set of laws and regulations. No one would be able to move, would be entirely constrained. The financial sector is one of the most heavily regulated in Canada. It's quite mature, it's developed. There isn't a risk they haven't thought of. There isn't a risk they haven't identified. There isn't a risk they haven't figured out how to manage. And so, my bias is that we should update existing laws. We should be technology agnostic. We should observe the principle, same activity, same risk, same regulation. I think maybe there's a bit of a philosophical debate about what a stablecoin issuer is. Are they a narrow bank, or are they a payment company? some tailored version of the Bank Act apply? Should OSFI supervise? Should it be the Retail Payment Activities Act, the Payments Clearing and Settlement Act, and the Bank of Canada? I think given that our banking laws are really designed for fractional reserve banking, I think it probably makes sense to treat stablecoin issuers as providing a kind of payment service. And by extension, or as a result of that, amending the payments laws we have on the books today to manage all the different risks they pose.
So as a builder, Marie, what do you think?
I think that's a lot of work. We do need some form of guidance at a federal level, I would say. Been in that space for a while, in the consulting business. And before that, KPMG was actually my biggest client was the federal government. So, they're still debating what a stablecoin is. And, we've been having those discussions for like 4, 5, 6 years. And each province treats digital assets differently. They can't agree on how to treat it because they don't know. They're waiting on what other countries will do and whatnot. There needs to be harmonization. So we stop having jurisdictions, that are like pro-crypto and not pro-crypto. It's just like it creates a lot of inefficiencies within the country, and you don't want that if it's a digital financial infrastructure. Like you want a Canadian digital infrastructure. You don't want a Alberta or a Quebec or Ontario one. You want a Canadian financial infrastructure. So there needs to be some federal guidance as to how we treat digital assets and what class stablecoin is not the securities. And, when you say, they are, it's kind of more like they're not, but, here's the framework we're going to use because we're the only organization that's kind of willing to look at it. We can't have that, right? Whether we need a Genius Act, we need some voice, we need some political volition, I would say, to actually put something on paper. I do agree that we have a lot of legislation that can be used, and it's about managing risks. And, just in 4 or 5 years, the industry has actually brought a lot of institutional folks from TradFi that understand those risks and have been addressing those risks. So it's not like, DGEM anymore. But, I wouldn't just copy paste Genius Act. I think, I don't know if I want Walmart to issue a stablecoin. That's up for debate. I'm not going to go into that here. But you do want to have some kind of, risk management, I guess, and understanding of what people are doing. It is digital financial infrastructure. So you do want people that know how to handle that, to do that. So
maybe the answer to the next question will answer this one. Does Canada need its own stablecoin?
You want me to take that one? It's not, I think it's a rhetorical question. Literally a year ago, before we even were thinking about launching a stablecoin, I was sitting with the IMF in Quebec, and they have a working group, and they asked us about tokenization and stablecoin. I was just like, you got to understand that stablecoins are here. They are being used right now. The question is do you want it to be US dollar based or you want it to be Canadian dollar based? I'd push this further if you think about it being real-time real, right? It's programmatic token. I'm going to use the word money. It's not money, just to be clear. But say programmatic money, right? Now, if you have that as financial infrastructure to do B2B or B2C use case, machine to machine, because this is where we're at today with the announcement we had before, we're really into the machine to machine payment and micro payment. You need to have a Canadian based stablecoin. Yes, you do. To do global trade, well, if you think about just FX generally, Canada is, I think transaction value is 88% USD based, but then Canada is still one of the top 5, right? And it's about 2% of FX reserves globally that are in Canadian dollar. So like we're still relevant. We want to keep that relevancy. But then again, you talked about having which rails Canadians are going to be using. Currently, they're using US rails, right? They're using USD base. So now when you have companies that are forced to use stablecoin to do global payments to get paid by their clients, and by this, I'm talking about like, you know, the company I've been at, when the world decides not to bank a company or to close the door, how do you get your money in, right? Now you're doing it in USD. I'm a Canadian-based company. I need CAD. I'm reporting in CAD. I'm paying my employees in CAD. So you need to be able to convert. You need to manage your treasury. You can't just rely on their infrastructure. Having worked with CBDC, I'm going to close that loop, but having worked with CBDCs and helping launch the eNaira, helping launch the CCB first digital CBDC, you know, you look at those developing countries and you look at, say, a country like Madagascar that doesn't have financial infrastructure. And when you realize they're actually using like US rails and sending money over to the US to be able to bring back the money, like they don't have financial infrastructure. Is that something we want for Canada? Like, no. So we need a CAD. We need a CAD stablecoin, that's for sure.
I don't know if I have a direct answer to that question, because I think market-based economies do a better job of telling us how much of anything we need. Do we need 5 banks? Do we need 12 kinds of toothpaste? No one person has all the knowledge to know what the optimal number or what the quality or price of goods and services should be. That said, I do think stablecoins are overrated and underrated in some ways. I think the retail use case is way overrated. Canadians love to use their credit cards. They get paid to use their credit cards. A very robust and mature fraud management set of procedures and protocols has evolved around that to make the cost of fraud and chargebacks just a cost of doing business for merchants. They factor it into their pricing. That stuff becomes very sticky and is hard to shake. I think stablecoins have a lot more promise in the B2B space, in clearing and settlement. But even there, they're not going to be good all the time. I used to run a business that had a bunch of Canadian companies as clients. They were financial technology companies, innovators, people at the bleeding edge. Guess how some of them decided to pay for what we did? Does anyone want to guess in the audience? There was wire transfers, checks. Some financial technology companies paid with checks. Why? Probably cash management strategy, right? It's delayed, doesn't leave the account right away. Faster settlement isn't always better. Sometimes people want to pay things very slowly. Also, an EFT, you know, like it's cheap, it works. Yeah, the system was built before the internet came of age, but it's, you know, a fraction of a penny. Funds availability within 2 hours once it's cleared and settled, unless you're super cash strapped and have some kind of control over how you're being paid. Most businesses are fine with it. The biggest cost of delays is not really the payment system. It's when people decide to pay their invoices. I also think the sovereignty angle is a little overplayed, in part because, you know, the reason why so many people want to do cross-border transactions in a US dollar denominated assets is because there is independent demand for US dollars. Imagine someone in a country without banking infrastructure who is selling something and only accepts or only wants to accept US dollars because that's the only thing his local economy will accept from him. What is likely going to happen if you try to pay for whatever he sells with a Canadian alternative? He might not accept it. I think if we abstract away from that, a CAD-denominated stablecoin is going to face the same challenge. That said, that's not a reason to oppose regulatory clarity for innovators who are doing this. There are efficiencies, and there's no reason why our policy should be so dated that you know, innovators in this country can't make it work.
So in that case, from your point of view, then, what is the strongest business case to use a Canadian stablecoin?
Our clearing and settlement systems in this country are like I was going to use a very strong word, but perhaps that diminishes my credibility. They are an embarrassment. Some of them were built before the internet came of age. The way in which they operate at an abstract level, the payment flow, it's based on the flow that bankers would use back in the day when they'd meet in taverns and exchange IOUs. Like it's kind of bonkers. There's a lot of manual intervention in the payment systems, a lot of manual reconciliation. There's also so many different systems to clear and settle so many different types of transactions that it also ties up a lot of liquidity and collateral. So there are so many things that can be improved there, and I think stablecoin issuers and tokenized assets on programmable ledgers more generally represent an improvement on what we have today, but I think that's really where the value is going to be.
I mean, you mentioned about the use case right around B2B, and that's what we're doing, right? Our focus is with key partners around B2B, and that's what we're targeting first. You know, I'm not an economist, but I did work with a bunch of economists, very smart people. They don't predict the future, but like I think, you know, there is an overplay to some extent, but CAD is still like relevant in the global space, right? As we explained. So it's about maintaining that. I don't think Canada's currency is going to take over the world at this point. But this is something every country and every central bank has been thinking about for the past years. And that's why they've been building fast rails. That's why they've been like looking at CBDCs as well, right? So you want to be able to have some kind of control over your local economy. And CBDCs are not happening anytime soon in Canada. I can tell you this much. There's too many, the acceptability factor is not there. And it's been the main reason why the CBDC endeavors that we've seen have failed. The relationship with money, the involvement of government, there's something that's not understood. Like, you know, maybe there'll be CBDCs in the future, maybe there won't, I don't know. But the fact is stablecoins are being used right now, right? And if we stop thinking about, you know, day-to-day, right? About, you know, me going, like, I don't think, to your point, I'm going to start using like a stable coin or an app to pay, right? But it's probably going to be embedded. I think when we talk about digital financial infrastructure, it's in the background, right? You shouldn't, as a user, kind of feel that difference for the end user. For that use case, you shouldn't see the difference. However, I was talking about machine to machine, like we're talking about this, I think. There's a project in Ontario around grid, decentralized grid, that I really liked, where, you know, you can start contributing to the grid some electricity. So if you have some kind of, I don't know, like solar panel or whatever, you can push it to the grid, right? And you get remunerated, you get token. Right now, it's not CAD stablecoin. But imagine if you can do that, you can contribute to the grid, and then you get fractional CAD, or the costs get fractionalized. You can do that with the current rails. There's no way it's going to be Visa or MasterCard or whatever, one of those. And why would we use US dollar? And like CBDCs, as I said, are like, we don't know whether that's going to happen. It's definitely not there. So there's also functional, like, use case for stablecoin, which are just, we can't just see it, but for people building that infrastructure, it's really clear it's going to be happening. Even with AI, you know, I'm going to stop there, but yeah.
So just kind of to bring it into the business context, I provided an example of being pulled into stablecoins by having to do international business. Now, whether that's remittance, cross-border payments, or payroll. And so the question to Alex is our current regulation adequate for a Canadian business to be able to participate in that? And for Marie, what would be the business's first step on that journey? Is our regulatory system such that businesses can transact in these non-monetary assets? Yeah, where it's going to still make business sense. So, I mean,
there's nothing absolutely stopping a business from deciding to accept a payment in Bitcoin or USDC or anything else. But where Canada's regulatory regime falls short is that it treats everything like security, which, if you're just in the business of payment processing, is way too much. It makes the juice often not worth the squeeze unless you're a very large company with a huge army of lawyers and compliance folks to make it work. And so in that sense, where our regulatory regime is underdeveloped is in helping the service providers service the businesses. It's not so much for preventing the businesses from transacting in these assets themselves.
Yeah. I mean, I think stablecoin is one thing, but, accepting Bitcoin to get paid, I mean, if you're just a regular business and are not necessarily in that space, like it wouldn't make sense. And like from a fiscal standpoint, I mean, you're going to need some major tax advice, which I wouldn't recommend. Just holding crypto on your balance sheet as a regulated entity is something. So in terms of first step, what needs to be done, we discussed it. I mean, it's a broad question, but it's not as simple as it looks at this point. You can just open a wallet, yeah, sure, and then, send it. But you probably want to do a bit more homework, I would say. There are regulated entities, so you need to make sure you're like dealing with regulated entities. And I think the next question you're going to ask yourself is how you're going to transfer that, right? And what are you going to hold? So if you're making a payment, are you going to constantly hold, for instance, stablecoin? I would highly recommend looking into a digital asset custodian if you're a corporation, because you want to know where your assets are being held. I know it's digital, but it matters. If you custody with a US player, well, if something happens, and the keys are being held elsewhere, well, have fun. We all know what happened during the last financial crisis. So, I mean, there's some questions, fundamental questions you need to ask yourself. I don't think it's as straightforward as just like, hey, I create a wallet and then I purchase and then I send it. You need to ask yourself some questions. It is low cost efficient for sure. Also, you should figure out which stablecoin you can actually purchase or transact in Canada, because not all of them are approved in Canada. So just, some basic questions, do some research. But I think you mentioned having a panel discussion with experts. I think that's a great idea, because people come to custodian, by the way, and with a bunch of questions about how do I acquire, how do I set up, how do I transact, and there are regulated entities. Just make sure you deal with those regulated entities that will help you get through that. I don't know how you did. How did you do it?
One thing I'd just like to add. TLDR, it's complicated. There's a lot of due diligence. You need to do a lot of questions you need to ask yourself, which violates the premise of how we've decided to organize our financial sector. One of the reasons it's heavily regulated for a variety of reasons, but one is to mitigate the effects of asymmetric information. A lot of consumers can't tell from the decor of their bank branch how stable that bank is. They can't go and look at the marble and say, oh, this bank is still going to be here in a week. Banks have been regulated so that a consumer, a business can go about their day, focus on what really matters, and not think about whether their money is still going to be there when they need to access it. That's another reason why I think policymakers really need to regulate this space, because it will help give consumers and merchants the confidence they need to engage with it a little more. When I ran FinTechs Canada, it always struck me as interesting that when I'd go into Ottawa and I'd meet with politicians and ministers and policymakers at the Department of Finance, regulators at the bank, OSFI, I wasn't going in there and saying, hey, deregulate us. I was saying we are one of the few industry associations that is saying, please regulate us more. Consumers expect a minimum standard that we all need to abide by. That's where the trust comes from. but you've been slow to regulate this space. So please bring on more. And that always raised some eyebrows because folks in Ottawa aren't used to hearing that.
Are there other markets that you think that we should maybe follow in terms of how we're going to do this in the future, in terms of regulation?
I think there are good elements of so it depends on what we're talking about. If we're talking about fiat-backed stablecoins, I think there are good elements in the Genius Act, but I think oftentimes Canada is a bit of a snowflake that does need that made in Canada approach. We aren't exactly like these other jurisdictions. For example, we have the very pesky Canadian Constitution that divides powers between the feds and the provinces. It makes things a little more difficult. So depending on what we're talking about, there might be things we can copy and paste, but others will likely require the made in Canada approach. And I think on fiat-backed stablecoins, the feds can assert jurisdiction there. It's not a security, but we have laws on the books that I think can just be amended. For things like crypto assets, it's a little more challenging. And I should add, politically, this government doesn't want to pick unnecessary fights with the provinces. We have a Minister of Finance who's popular in Quebec. Upsetting Quebec would not be good.
There's the whole made in Canada, and then there's the made in Quebec. I come from there, so.
How do you see the Canadian banks fitting into this evolution? Partners, competitors, bystanders?
Okay, well, that's a very funny question. So I was in management consulting before. I mean, they've been curious for years, doing some pilot projects. And interestingly enough, Desjardins actually had a wall that they created, and they were quite advanced at some point. It's managed by risk, and risk has been blocking any kind of advancement for that. All the major banks looked at it, have a team or part of a team, but it's too risky. So it's really those decisions are run by that, unless there's the PDG, the CEO of one of those banks that actually decides to, take a stance. I think the fact that National Bank with Ventures invested as part of our race. They took a small position. This is really learning on their side, so I can't, discuss the terms of this, but this is kind of, I would say, a first in Canada. But just to be clear, banks globally have been experimenting with blockchain for a while. We were just really, really late to the game. They've been trying to grasp. When you talk to the boards, they're still confused about, there isn't one blockchain. Bitcoin is not a stable coin. We're still at that stage. Not to be, I'm sorry, I hope there's no bank representative, but I've been presenting at those boards. So, having to explain what sorry, but it's just we're not there yet. It's not going to pass risk anytime soon.
Where would you like to see the relationship, Alex? Do you think we need more of them taking risk in this?
Banks?
Yes.
I mean, look, it's easy for me to sit here and tell these banks they should be taking more risk. I'll just say, having talked to banks, worked with banks on things that seemed relatively simple, it always struck me how difficult and complicated they made it, and how long it took, and how their risk aversion actually prevented them from being able to manage other emerging risks. They were so risk averse they couldn't manage the risks right in front of them. That I think needs to change.
Well, we talked about regulatory clarity. One of the things that needs to change is having regulatory clarity, and FIs have been looking for that as well. I think if they have regulatory clarity, they're more likely to participate, because you don't want to get slapped for trying to innovate as a financial institution, right? Because there's that overall responsibility you talked about, essentially you're that one institution, which I don't need to think about that when I'm going there. Theoretically, my money's going to be safe, right? So you do want incumbents, I guess, to innovate in a very responsible way. but they're also limited by like what regulation and regulators are allowing them to experiment with and innovate with. So, I know I'm playing the devil's advocate here, but there's just that double play there. And there's also like, yeah, go ahead.
I'm not a banking lawyer, and I have no real interest in reading the hundreds of pages that make up the Bank Act. But I have heard secondhand that like it's not clear there's anything stopping Canadian banks right now from tokenizing deposits, for example. They meet with OSFI on a regular basis to make sure everything's okay. There are people they can ask. There are people they can talk to. OSFI can issue supervisory guidance. If banks wanted it, they'd ask for it, and they'd probably get, maybe not exactly what they want, but some version of it. The fact that it hasn't been issued to date makes me think it's either not necessary, or maybe banks just haven't asked and don't want it as badly as they might suggest they do.
Now for the futurist question. So if we fast forward 5 years, what would success look like for Canada's digital asset ecosystem? What signs would be that we got it right? Would it be that we finally got open banking, or?
Open banking at the very least. That's really long overdue. I would also hope that we've modernized our legacy payment systems. There's a real-time rail. We've modernized our deferred net settlement system, the ACSS. And maybe the Bank of Canada has started experimenting with the future of our high-value system links, which settles some of the balances that arise out of these other systems, and thinks about maybe establishing its own programmable ledger that you can have all sorts of tokenized monetary and non-monetary assets on, including stablecoins. And we definitely, hopefully by then, have a federal framework for the issuance of fiat-backed stablecoins.
In 5 years?
Look, I think it's always going to take longer than everyone says it will. We said we were going to build. So how many people here use Interac e-transfer? That's not actually a real-time payment system, though it feels real-time in the back end. It clears and settles over much longer time periods, and so there's counterparty credit risk in the meantime. Payments Canada in 2015 said, we're going to build a real-time payment system, so the clearing and settlement that powers that system is real-time. So not only does it feel real-time to you, but actually on the back end it's real-time. It's 2026. That system is just undergoing testing. We don't have a launch date. The legal framework underpinning it hasn't been finalized. A few years ago, there were meetings held between then Minister of Finance Chrystia Freeland and the CEOs of the big banks to talk about this. In part, I suspect because they weren't fans of the system. It was costing them a lot of money. They were saying, why are we building this? E-transfer is fine. That's the pace at which things move in this country. And so, 5 years would be fast. It'd be world record pace.
So I know it's like almost time, but I'm gonna leave you with some theories. I'm a consultant by nature. I like to think about the disruption, right? When do we get disruption? And where it starts with specific use case, specific user sets, right? And you have a product that's good enough and that's catered to people that don't have their service or have really high cost service. Now you're giving it to them at a very good price and it's good enough, right? And then you test it and you improve on it, and that's stablecoin like 4 or 5 years ago, right? So it's been iterating, and then the quality gets better and better and better, and incumbents are not going to cater to those use case, right? To those small tail use case or customers. And what happens at some point is that the users kind of choose the better alternative. I think this is really a disruption moment. We don't want another, but communication, telecom, or, media. If you think about journalism, what it's faced, we don't want another Uber, right? Disruption. But this is really, what's happening. So it's going to happen. I don't think at this point, I can't predict. I'm never going to predict what's going to happen in the future, whether it's stablecoin or something else. I hope in 5 years it's running in Canada, regardless of banks or whatever, because we have regulated organizations that are pushing forward for the right framework and doing things the right way. Tetra is one of them. We're backed by great investors that have been doing it and been pushing towards it as well. We come from institutions that understand risk and manage risk, so it's happening. I just don't know whether regulation will have caught up by then, but it would be great.
Well, so I guess I should have asked what it'll be like in 15 years. We need to adjust the regulation somehow, in some way, in order to take advantage of stablecoins. And if you find yourself needing to use stablecoins, it's complicated and you're going to need some consultants. So I think that kind of summarizes the...
But it's going to get better, because I think for users, you're not going to see it, right? It's going to run in the background, as you were mentioning. You don't know what's Interact doing, right? Interact might just move to a blockchain rail in the background.
Well, thank you guys for sharing your insights. And we'll open it up to questions now, if anyone has any. You can go first.
So first, where's the testing? So thank you very much to the panel. Great discussion. My question is, what impact will this have on the money supply? So we now have digital dollars, we have real dollars. The central bankers are going to do some things to want to keep controlling the money supply. How's that going to work, and what issues do you think we're going to have?
So I'm not going to predict what the future of the money supply will be, but I will say one of the I think rated, how can I put it? It's not necessarily a problem with fiat-backed stablecoins, but one of the things that I think makes it inferior to commercial bank money is it's not elastic. Stablecoin issuers operate a lot like a narrow bank, and so when demand for currency fluctuates, the issuer of the stablecoin can't increase or decrease the supply of stablecoin as easily as a bank on fractional reserves can. And so I think in a world, like a stylized world where everyone's a narrow bank, the money supply doesn't change unless the central bank makes it change. So if narrow banking becomes more economically rational and displaces commercial bank money more and more, perhaps what it means for the money supply is that it becomes less elastic over time. But take my prediction with a grain of salt.
No, I'm not an economist. I said that, but one thing I'm going to say is that what I said earlier, stablecoins are not money, right? Similarly to, Bitcoin is not money. And there's very specific things that central banks will look at for the characteristics of what is money. And, the fact is, we have already a digital form of money, of Canadian money. The point is, it's not necessarily built for the future of our economy, but that, whenever I hear politicians saying, hey, let's abolish the central bank, I'm like, Jesus Christ, you're helping our industry. Sorry, but I'm just saying it out loud because central banks are not going anywhere because they're actually doing that important job. So that's not going anywhere. And stablecoins are payment infrastructure. The digital financial infrastructure, it's not money. I think it's very important to clarify there.
The Bitcoiner? Just kidding. Then the next question.
Sure. Can you hear me okay? Yeah. What's it going to take for Canada to get away from this risk-averse copycat strategy? Like, I view stablecoins, it's a copycat. We're saying, oh, the U.S. is doing stablecoins. We have to do it. I really don't see a compelling use case other maybe to make the domestic payment infrastructure more efficient, but internationally, I don't see a compelling use case for like a Canadian-denominated stablecoin. And it's just like in the early 20th century, like Federal Reserve, 1913, 1932, we have Bank Canada. We had actually a really good private banking system in the late 1800s. So the question is, what I'm really worried about, like I'm seeing similar signals to what happened 30 years ago in the telecom industry. Scrappy protocol called TCP/IP came up, and then it transformed the whole telecom industry, and we had to literally pivot. So I guess the question is that are there any discussions on if we have to do this plan B or pivot, like a moment of disruption? I really feel that's going to happen, and we're just kind of sleepwalking into it.
We are. Not me, not Tetra, but yeah. One other example I gave to regulators a few years back is everything that's being done with the BIS in other jurisdictions, right? And, they're getting their hands dirty to understand questions that were raised. What's going to be the impact on the supply of money or whatnot? Really, they're testing, how's it going to work? How does it integrate? And so when you say they're sleeping on it, they're looking right now at what other jurisdictions are doing, other central banks are doing, and trying to learn from 2 steps away from the process. We really need to be in the driver's seat in it. I'm going to say this right now, Tetra is a regulated organization. We've been for a while. We're regulated in Alberta, but we're really close to other jurisdictions and have been showing our books, and we're really transparent. But we are knocking at each door and we're saying, hey, we're going to give you visibility. We want you in. We want you to learn. So I think it's also about industry driving that momentum and bringing in regulators and governments to learn so that they can catch up with the speed. So I think it's for industry to also just innovate and not wait. When you say about the risk averse, our whole even you're an investment analyst, so even in terms of the capital and type of investments that we make, we're more risk averse than other jurisdictions. So I don't think we're going to change our DNA overnight. I'm not. Same way Quebec's going to continue doing made in Quebec. Sorry, we had an inside joke with my CTO on the way here. So that's not going to change, but I think we can actually drive the momentum, and there's great examples of how we're driving innovation in Canada. I just think for the financial system, we just need to maybe take more, proactive actions, and that's what we're doing.
She scooped me. It's in our DNA, our institutional DNA. It's in our history. We're not going to become less risk averse. We're not going to stop copying the Joneses.
I just said to someone the other day I'm risk averse, and they started laughing because I'm in crypto, but I'm really risk averse, by the way. I do own crypto. I do own Bitcoin for the long term, FYI. But I understand the risks. I understand the mechanics. I did my homeworks. Not investment advice, just full disclosure. But I am averse to risk, but I make informed decisions.
If I just want to close off, I just say the Canadian approach is always, what are others doing? It's not what can we do for ourselves?
So
Stop paying consultant.
Open banking. The last government wasn't going to make any progress on that. It was looking like things were going to die. The CFPB, before it was dismantled, before Trump got elected, dropped this draft open banking rule. Overnight, all of a sudden, the feds loved open banking. They wanted to do it. Everything changed because south of the border, someone thought it was a good idea.
Yeah, doing what others do. So great.
But the other thing, too, to look at is, the U.S. has just been the loudest recently in catching up on a lot of this stuff. It's not new. I mean, Asia, 2018 is kind of when they started this path. I think it was around there when they started doing the open banking and the open finance.
Yeah, when China kind of cut the Bitcoin miners, they all came to Canada. Yeah, that's about it. But yeah, I mean, the BIS has been doing a lot of research on blockchain infrastructure.
And I mean, Singapore has been a sandbox for a lot of this stuff for quite a long time.
If I can add, my main point is the major AI innovations happen in Toronto. The major telecom innovations literally happen in this town. And I just feel we're not looking at our own innovations to leverage to the rest of the world. We're just looking elsewhere. And that's a bit of my frustration right now. It's more of a systemic thing. And that's something I think what we need to do as an industry, especially in this industry, is maybe looking at something that's completely new, innovative, as opposed to saying, well, that's what the US is doing, that's what the BIS is doing, that's what Singapore is doing. Maybe we should do something same, but more politely Canadian.
You see it in the companies too, right? An entrepreneur here sees a particular business model that works in the UK, and they're like, Canada doesn't have one of those. Let's just copy it.
Well, Ethereum's Canadian, just, the founders. So just keep in mind, so we've been innovating, but what we're seeing, you talked about it earlier, and I've seen founders exiting Canada and builders exiting Canada because the tax system is not following up and they're getting paid in tokens, for instance. And it's just really, if they want to be able to build, they have to move elsewhere. Otherwise, and that really, I'm not going to use that word, but that's really sad to see. So we have exodus of talent. Just to be clear, like blockchain talent is also AI talent. I don't know why we decoupled them. We're really proud, AI hub, Canadian, yet we don't think further than just AI. And we forget the whole, I know it's crypto, but Web3 includes AI and crypto, just to be clear. And that talent is moving to jurisdictions where there's political volition to innovate and be curious and build the future.
And just the one more thing on that point before we move to the last question. Just like we have the talent, we have the builders, they build these products to solve problems they see from Canada. It's a market adoption issue, and this is in lots of industries here. We build things and we sell it to either another company abroad, or we, like a lot of the crypto companies in Canada, they live here, they operate here, but everything has to be registered outside and they have to sell outside because we decided from a policy standpoint, we don't want it. And so it's not that we're following others, because we're building it. And if you look at all the really successful blockchain companies that are Canadian, that have found their way, you can tie them all back to one company, just like you can tie a lot of the telecom to Mitel and Nortel and all those groups. And you can do the same thing with blockchain, same with the fall from what came out of Shopify in terms of the companies that dropped out of it. So it's still here. It's just like we build it, we don't use it. So we're just going to do one more question there, and then we're going to call it. Yeah, let's let the Bitcoiner. Let's have his question first.
A lot. Thank you a lot. So I wanted to talk about stablecoins for consumers, which I was a bit disappointed you seem to not be super hyped about, which is okay. But B2C e-commerce, for example, I work for Shopify, so I see this as flexible internet money. Traditional money is slow. You have credit cards, which really is like a debt relationship with your bank. Some people are not great at paying it back. I like that with stablecoins, you just top up your account. You have full power over how you handle your money there. You mentioned like credit cards have, for example, reward systems. People get incentivized to pay with that. You can have the same with stablecoins as well. There are already some systems I've seen.
Agree, by the way, with everything you're saying. We didn't talk about it much, but that's
awesome,
the future.
Awesome, love to hear it. Lower fees, probably, for merchants as well. Right now, the customer doesn't feel it directly, but indirectly, because prices need to be higher to accommodate for that. The big hurdle I see is wallet management. People, how do they handle those coins? I'm like a self-custodian. I manage my own wallet. I realize this is really hard, but I see lots of companies who are working on making it easy to sign up with email and password, and then you get a wallet there. So I see it as the future, but it might take some time. Curious how you feel about it.
To your point, like the industry has evolved quite a bit. They've understood like a few years back, right, the hurdles for adoption, and like the point you're making is like making it seamless for the end users. And there's been a lot of innovation going into that. We talked about financial institutions, banks getting into it. They are a major, I think, incentive for especially like, I'm older. I think I'm older in the older generation where you really like, it's not as if you're going to start getting banks somewhere else, right? So, it should be really seamless in terms of transition. But for younger, this is a multi-generational transition we're seeing and change. And so we're going to have ways of different adoption, but it has to be seamless in terms of how we transact with stablecoin, right? So we already use our phone for everything. Now, the only thing is what's running in the background is archaic. You didn't use that word. I'm using it. But,
I said embarrassing.
Yeah, I'm using archaic because it's still paper-based. It's still humans entering digits in a ledger when we can have real-time atomic settlements through blockchain that is not prone to error, right? It's not human. So, I'm just adding that commentary, sorry.
Some people are trying to get out of here, so I'll leave it at that.
I think I'm good here. I think I said what I had to say. We're going to innovate no matter what. That's what we're doing with buildings.
Given the risk profile of the country, maybe the future will be all about fiat-backed stablecoins because you guys issue tokens against high-quality liquid assets, very safe investments.
Thank you. Thank you.